this year.
So what should you do if you're being priced out of the insurance market? Is there any alternatives, or should you just drop what you can't afford? Personal finance expert Carl Dieter is here now to explain some more. Very good morning to you, Carl.
Good morning.
We have figures there, 53 at about 75,000 people last year who dropped health insurance. This year it's set to be expected to be about 100,000.
That's what's being said at the moment. Those are the projections. Now, it's important to realise when you have times where the economy is tough, people tend to cut back on expenditure. Because underneath it all, we do have what's known as a free health system. Health insurance for some people, when it gets tight enough, is seen as a luxury item. There were levy increases last year. We're going to have levy increases this year. In fact, it's important to remember your health insurance is built of so money which goes to the health insurer and so much just goes directly to the government. And they're increasing the cost on an adult from €200 to 285, which is a 40% increase on the tax portion. So that gets passed on to people. Now, when it's a situation that your insurance premium goes up, normally it's not a case that €60 pushes you over the edge and so you'll spend zero on it. What happens is that people are being hit from all sides with household charges, any kind of taxes.
Water charges,
It's an overall thing. One thing that I think is really underutilised in this country, though, is a thing called the Hospital Saturday Fund, which isn't like health insurance because it doesn't provide hospital stays, surgeries and the like, but certainly for your regular medical needs like doctor visits, going to the dentist, spending a night in hospital, there's certain amounts that they will pay you back. So basically you pay up a premium which can cover a family. The best scheme on there is only $81 a month. The best scheme with VHI is around 3-4 times that amount per month. And I think it's a good alternative if you can't afford, for instance, maybe around €200 per month that it would cost with one of the mainstream insurers. For €81 a month, you can cover the majority of bases, and there are some maternity benefits and the like as well.
What's the cost and who provides that?
Hospital Saturday.
Had you heard of that?
I have heard of that.
Hospital
Saturday Fund.
Okay.
It's a charity. It's been running for many, many years, and they provide what is in effect like a form of health insurance, but it just doesn't cover as much as the likes of your Aviva, VHI and Quinn.
So should you need a hospital stay, then you're in the public domain, but up until that point, at least some of your bills...
Yeah, Hospital Saturday Fund wouldn't be the kind of thing where you skip ahead of the queue of the public patients, basically. But what it is a good alternative. If you say that I can't afford 150 or 200 a month for family cover, well, this is something that's half that amount. And so it's better than going from having cover to zero cover. You're stepping down in gradients rather than going from having cover to nothing at all.
The reason why people are having to cut this is because of this levy, and because it's a levy, it's not for the insurer's benefit. It's for the government's.
Absolutely not. It's no benefit to the insurer. It is just literally something that they have to pay. Now, there's over 2 million people who have health insurance, and when you add it up, that turns into a lot of money. I mean, there's over $500 million will be going out in levies. Now, some of that comes back down because you get tax breaks on health insurance premiums, but the point is, it's a tax. It's not a direct tax where it comes out of your income, but it's an embedded tax, and it makes everything more costly. Now, we are being told that it doesn't necessarily mean premiums have to shoot up, because hospitals might be able to find better efficiencies with, a new scheme where the money follows the patient. But my suspicion is that the natural inclination in the short term is that the prices will go up in order to compensate for this. I don't see how they could get the answers and the efficiencies as quick as this is going to come in.
The Minister is saying that this is just a short-term thing, that he's working on another system where everybody will pay the same amount.
Yeah, there's expected to be a universal health insurance, but that is something that I think it sounds very appealing, but to actually implement it is a much bigger job than simply saying, voila, here we go, we're going to change over. There's legacy systems, there's existing contracts out there with consultants, hospital staff, with everything right throughout the whole system, and you have to get all of that changed for it to be an effective and working mechanism, and that's the thing that we don't know. So I think that the date given in the region of 2014 is perhaps a bit ambitious, given that you have to change such a monumental part of our system.
And the problem is that it's young people that are dropping their health insurance. So it's the older people who will have higher claims that will be pushing up the price of premiums.
Yeah, it depends how you look at claims. I mean, there are young people, for instance, who would get cancer and have huge oncology costs. So the actual claims aren't always age dependent, but by and large, older people do get sick more often, and they get the kind of illnesses that require ongoing care. That's why it's so important to have lots of young people in the system. It's the same with any kind of insurance, even social welfare, which is a brand of insurance, requires lots of young people working so that pensioners can get their pension every week. If you see a drop-off like what we're expecting, it will, again, cause prices to go up overall, because you can't have loss-making health insurers in the market for very long. You can't buy something at €1 and sell it for 50 cents and stay in business.
Of course, it'll also put the public system under even more pressure because it's already under-resourced.
Well, that's exactly what's happening, is people are opting out of private health insurance and going for the public one. There are some things, though, happening in the insurance space, though, that I think will actually be nice. I mean, we also saw last week how it was seen that men were being charged a lot more for car insurance than women were. Well, there's actually a European Commission case that will mean from December of this year that you can't discriminate based on sex anymore. And that's kind of similar to the way that you see it working in health insurance. You can't discriminate based on age.
I think it's amazing that we have been putting up with that for so long. That has been in effect for nigh on 20 years, if not more. And yes, if it was the other way around, there would have been absolute murder.
But surely there was a reason for it. Because
well, they said that women were safer drivers.
Yeah.
But nonetheless, it was still discriminatory.
Well, men always complain about women drivers, and then we go and crash cars. So, the truth of the matter is that they are able to establish that male drivers might have more crashes, but what they can't establish is that it's actually down to genetics, and that's why this ruling is coming in. It can be down to other factors. So what they will do is discriminate on price. For instance, if you drive what might be considered a boy racer car and you're a young male, they will look at things like the model of car. They'll look at the mileage that you're doing. Because if you actually bring all men in a population and all women up to the same amount of mileage, the actual statistics on crashes start to level out. What is being said is that the reason that men were crashing more is they were actually physically on the road a lot more, and that there are groups within the male population that are higher risk. The key is to identify them and not just hit everybody who was born with male plumbing with a higher price.
I know, and if by chance you're the wrong age, if again you're too young, I know you've mentioned the boy racers, again there'll be additional charges on your car insurance. So I'm glad to see that there's some kind of equity being
I think it is. If you look at unemployment, in particular in the 18 to 24-year-old male category, 1 in 8 of them is out of work. And I think that having transport unlocks so many opportunities. It enables people to look for jobs farther away if they need to. It gives them choices. So anything that frees up society and makes an economy more viable for all of the people involved, I think is a very powerful force for good.
When is that going to happen? Is that definitely going to happen?
That ruling is in paper. It's there from the 21st of December onwards of 2012. Okay. So you got to wait a little while more, but it's coming.
Yeah. Okay.
I just feel sorry for teenagers and kids in their early 20s trying to get on the road driving, and they find that their insurance is nearly...
That's because you're paying your son's insurance.
No. If he wants to drive, he's got to pay his own insurance. But I think it's wrong that they should be paying $2,500 when others, girls the same age, are getting it for $1,500. Anyway, credit unions have also revealed some figures this week, letting us know that people are borrowing money just to pay household bills.
Yeah, credit unions are doing a lot of surveys, and they're saying that people are scared that they're not going to have enough money to cover their monthly bills. What I would say is that these types of surveys aren't necessarily correlated with the people who don't pay their bills. What it does do is give a very good impression of the kind of feel of the nation, that people are worried. And I think that's a tangible fear that we all know about, because not a day goes by that we don't see something bad in the papers about the state of the country, about the state of the jobs market. What I would say is that the country on the whole is still saving. So there are people out there who are doing okay. There's a lot of people out there that have no mortgage debt. Only every second house in this country has a mortgage on it. So I think what we're seeing is that there's two very different societies emerging between the kind of haves and the have-not. And the have-not this time is they have not any debt, and the haves do have a lot of debt, and therefore they struggle with it. So I think it's going to be a case that if rates continue downward as is expected, if we can get the banking system functioning in terms of credit to small enterprises, if we can get some job growth, I think that will eventually change. But certainly in the short term, people are worried, and a lot of them have good reason to be. But a lot of them as well, I think, are worried when in fact what they're doing is their wealth is growing rather than deteriorating, and that's purely down to confidence.
Well, Carl, as ever, thank you so much for that advice, and we'll see you again very soon.
Yeah.
Okay. Cheers, Carl. Thank you. Now, it seems there's one thing we're still spending on this country.